Good evening, guys. How you doing? It's December the 15th, 2020. So we're going over Bancor. Bancor had a nice little run up today. Well, actually, yesterday on the 14th, it moved pretty well. Had a breakout on the actual 13th. So we had a nice little move, parabolic move to the upside. I wanted to go over one of the trading strategies. Well, not really a trading strategy. It is. It's a mixture. It's an investment strategy and a trading one. It essentially allows you to take advantage of an asset moving while also profiting at the same time, but also leaving your initial, a portion of your initial investment in. So it's called the double pull out method. All right. And we're going to go how it works. We're going to go over it. So just for learning purposes, let's say you bought in this region, and right here is around 52 cents. Okay, so here, 52 cents. Let's make this larger. All right, let's label 52 cents. You bought. All right, so whenever you double your money, you're going to pull out 30%. So let's go ahead and put some notes up here. All right, once money is 2x double, you will pull out X percentage. All right, now in this plan, we're gonna do 30%. So we don't even have to use X. We're gonna actually use 30%. You can use any percent you want. Like 30 is like a nice little sweet zone. All right. So once the money is 2x, you're gonna pull out 30%. All right. Once price returns to MA, which is moving averages, we will use 50% of our profits. Buy back in. All these can be changed. All right. I'm just giving you a blueprint. It's a lot of things you can get sophisticated with. Okay, so we had 52 cents. All right, and then 52 cents times 2 give us what, $1.04. All right, so let's go on the screen. Let's look for $1.04. All right in this area. All right, so we're gonna put a little box here. Right here. All right, and this area is $1.04. Okay, so if you're using a sell limit, meaning that you tell the computer where you want to sell it at, you'll set it for $1.04, and you can give it some directions that you want to sell out 30%. So as soon as price reaches this, you sell out 30%, right? All right, so now you're out. Now, we're gonna do this. We're gonna throw our moving averages on screen. Boom. All right, and then we're gonna go back in time. Let me take them back off. Let's go back in time. Let's go back and let's do this. All right, let's do this. All right, so we're back in time. And let's play it. Okay, targets are approaching. Targets were hit. All right, now let's throw our moving averages on. All right, this red line is going to be a 20 period moving average. So whenever price comes back down to this red, that's when we're going to look to buy. Okay, so remember that says once price returns to the MA, see it up here, we'll use 50% of our profits to buy back in. So, also, we're going to use this. We bought in at 52 cents, but let's say we did $200 worth. So we spent $200 at 52 cents. All right, and now it doubled. We have $400. I'm using basic math. I'm not worrying about fees and all other stuff, so y'all can get the understanding. All right, we put in 200, and then it flipped to 400. Okay. All right, so we got that here. Put 200 in. Now we got $400. Now out of that 400, we're gonna do 30%. Use the calculator. All right, so 400 times 30%, which is really 0.3. All right, equals $120. So $120 is what you can pull out. Now remember, we said we're gonna do 50%. We're gonna divide that by 2. Boom, we're gonna put $60 back in once it comes back to this red line. Okay, so let's play it, and we're gonna see what price we get back in at. All right, boom, we got it right here. You can't see it really, but it's there. It's close. And if it's this close, you can go ahead and start buying. And we also have what we call a single double bottom event, 2 candles, showing some buying pressure right here. All right, so we just put $60 back in. So how many coin shares that we can get? Let's see what the price point is. We're looking at 89 cents. So 60 divided by 0.89. All right, we got 67 coins, added to that. All right, now let's look at this. You still have, let me see. Sorry, 400 subtract 120. All right, you still got $280 in the market working. However, and then you just added back 60. Okay, so now you have 340 in the market working now. All right, so here we go. You bought back in. All right, let's play. So it's at 89 cents. Let's do this. 89 times 2. All right, $1.78 is our next trajectory on this. Okay, so let's. All right, boom. So you see right here it says $1.78. What are you doing? You're taking 30% off. All right. So let's do the math again. Let's look. We had, was it we got $340 in there now. I'm sorry, we had 340, and then that 340 times 2, 340 times 2, because it doubled again, right? Okay, 680. Okay, now remember, when it doubles from where you buy, all right, you know, that's what you want to focus on. Now, let's say you didn't buy again, and you don't have to. You don't have to put money back in. You can just take 30% out and just leave it. You don't have to worry about halving it. That's just me. Sometimes I do that, but actually, I really wouldn't use this method that much right now because we're in the earlier stages. But let's say you just want to keep it in. That's fine. You don't have to wait. You don't have to go off the rule of, hey, wherever price I buy it, it has to double from there. Because you may decide that you don't want to keep buying. You want to just leave it in your original position, and you still can pull out because the compounding method will always keep you in the asset. It doesn't matter if it's a stock, crypto, or whatnot. You're always using a compound. So in this instance, we have $680, and then you're gonna do times 30 cents, which is 30%. So we get $204. All right, we can pull out right now if we wanted to. We're gonna leave the rest in. Subtract what was it, 680? All right, so you have $476 left in your account that's working. Okay, now with that being said, with the 476, all right, look where we at now. We need to double from here. Okay, so what we do is, if you're not going to pull out and you want to, if you're not going to reinvest in, all right, you're going to wait for price to double again once it surpasses this resistance point. So let me repeat that. If you're not reinvesting back in, you're going to wait till this pass and double from here before you may take your 30% again. Okay. Now, you remember what I said about the red line, right? Well, if we sold and we got our $208, I'm going to use 50%. So I'm going to put 104 back in on this when this price meets this red line. Right now, we're further away from the moving averages. Therefore, we're not doing anything. We're not doing any buying. All right. We sold. We got our money. We're good. If price starts to drop back down to this area and the moving averages move up and we meet it, then boom, we can put in that 50%. Or, if you want to just buy, just to buy. So here's another thing you can do. With this method, you don't have to pull out if you don't want to. You can just say, hey, I just always buy when it comes back to the moving average. You can do that. So over here, this 52-cent run up to 104, you may have a psychological number and say, hey, every time this asset doubles, I'm just going to add every time it pulls back from jumping, 200% or whatever, 100%. So every time I flip my money, I'm going to add when it pulls back from my, what you call flipping point. So if $100 go to 200, and then if it drops from 200 to, 150, you may say, hey, that's my adding point. So I add more in without taking anything out. So somebody may say, well, that don't make sense. You're adding in a higher price. Yeah, but you're also adding in what we call a true uptrend, or it's just a healthy overall, basically, it's a healthy overall trending market to the upside. So anybody who knows how to teach this stuff, we don't want to buy here. You can, because overall we may look back in hindsight and these prices so low it didn't matter. But I also want you guys to maximize your earning potential and your investment, your portfolio. So in order to maximize that, We need to have great entries. We're not going to be able to time the market. I mean, no one knew that this breakout would occur or whatnot. But we also know that we're smart enough that nobody in this group should be buying, should have bought right there. Okay, it was nothing. In fact, let's go back. Let's clear this whole thing out. Let's go back and let's look. Let's take these moving averages off right quick. Let's go back and let's go back in time. Let's look at this parabolic state. Okay, look, watch this. All right, you come in the market, you see this, you say to yourself, "Hey, man, I'm missing out. I'm just gonna go and buy. You know, the heck with it." What you say? This can be psychologically dangerous. This can play tricks on your mind. It can make you seem like you made a mistake, and that's exactly what happens. Someone buys here, and then watch price starts to drop. And looking at naked chart, this is a zone I want to see. I want to see price come here to this zone right here. And I want to see how it reacts to this zone. We don't necessarily just want to buy because it dropped into that zone. We really want to see how price reacts in this area because price could go lower. Okay. Okay. What does this mean? See how this came down, touched the zone, then spiked back up? It's a retest. You just can't see it. A retest of what? Let's do this. It's a retest of what? This right here. This zone right here. Underneath, right here. All right, it's called market structure. All right, this is market structure. Price what? Broke below, came back above, broke to the downside, and then came back into this what? Structure. So if I was actually trading this as a short position, whatever, I was taking the other side of this trade, I possibly could have seen price come here, and then I knew that, or I didn't know, but you got a higher probability that it's going to pull back into this area. All right. And then I could throw my fibs up, and I'm pretty sure it's probably like the 61% retracement zone, which is the area that we like to play around with. And below and behold, I was correct. See, 61%. See that? You can't even move this. Price what? Move 61% back. Bam. Boom. All right. We'll look to go short now. Why would we want to go short now? Because this was a nice little bearish trend to the downside, and then we got a recovery or retracement. All right, so this gives me the sentiment that we possibly could be going lower because of this selling pressure. It's giving me an indication. All right, so with that being said, once again, somebody bought up here, but no, we want to be smart. All right, so let's play. We got a double top, single double top. Look at that. Okay. Look what's happening. Just because price come here doesn't mean it's an automatic buy. That's what messes people up. It doesn't. It really doesn't. You have to look at the overall structure, and you have to understand what the trend was doing initially. Give you a little secret. Whenever you see an asset like this, that's massively moving like this, especially an asset that's not established, you're gonna have deeper corrections, not shallow ones. So if you look at like Amazon, Tesla, I mean, they had some good pullbacks throughout the years, but a lot of them was like shallow. They just kept going. That's a whole nother animal because of the volume and the amount of people that's participating in it. So it's a little bit healthier. But with these, you're going to have massive run-ups and then you're going to have massive drops. Okay, so what I would do is I would pull my fibs up and I would get areas where I believe price will come back and I can be patient. Because if I come in the market and I miss this opportunity, I'm not going to chase it. I'm not going to sit here and get in right here. I'm going to wait for price to come back to me. Now, listen, this thing, 61% is the area that's my first buying zone that I would have on this chart. So price coming here, okay, I will buy. I'm going to move this out the way. All right, so if price come back down to the 80, to the 78, I'm going to buy. All right, scaling in. All right, and then the last one, I'm going to do the 88%. I will buy. Now, if we go below here, depends on if I got capital invest, I may, but eventually you're gonna you get to a point where like, listen, I'm not adding any more. It is what it is, and we'll go from here. All right, so these are the levels that I have, and the videos I got on the technical analysis, guys. I mean, it somewhat prepares you for this. Some other things I may need to talk about, but for the most part, it does. All right, so let's go ahead. Let's play this. All right, so here's an indicator. If it breaks this first zone, then you have a higher probability that's going to go to the second zone. So as soon as it broke this, I would be looking to go ahead and get prepared to deploy my capital to buy the second zone. All right, look what we had. We got a pullback. Pullback where? Look, see this area? This was resistance and it broke, and now serving as, I'm sorry, this was support. It broke. We came back up and candle the test. That is now resistance. So we'll see how that candle works. Still got what? Pressure. This is resistance. Price is having a hard time breaking. All right, this is consolidation. It's getting ready to do something. It's either going to go to the upside, it's going to go down to the downside. Boom. We got the downside. Okay, this was shaping up. Goes to the downside. What did I say over here? We got a higher probability that if it breaks this zone, it's going to go here. We're going to come back and we're going to retest this area again. We're going to see how price reacts. Now let's see. We may shoot up to the upside, but let's see. All right, we got a small qualifying event. We broke this structure right here. We're going back to retest. We may be ready to start going up to the upside now. So let's see. But we bought a position. We got a position in at what, 69 cents. So we got in at 69 cents. We got in at $1.14 or so. So we got two buying opportunities. We're good to go. All right. Pull this over. Remember, the zone was broken. And more likely we may come here. All right, we got close. We didn't get all the way there, but we got close. This is at 52 cents. Let's go back to let's look. Let's see something. And sometimes when you're on your fibs, you could have inadvertently not measure it properly. So sometimes, or you may be a little bit off, but that's close. You're close to the 88. And that's the beauty of this. It's not going to always be on point, but you see that it got close. All right. This is the best you can get. So we're a few cents off that, but we almost got here to this zone. All right. So if you did buy, you did, and if you didn't, that's fine. All right. So let's keep it moving. All right, now we're in real time. Okay, that's exactly what we saw. All right. We was able to get a couple buys in. Now we're up. But the main important thing is, if you're learning, you're not buying there, and you shouldn't be buying here at all. Okay. So it's going to be times when you do buy here, and then it just keeps going. that's going to happen. I mean, it's trading. Anything can happen. I mean, but when you start developing that bad habit, you're going to get hurt more often than not. So it's not really a good idea, because yes, this person bought and they could be holding, but at the same time, look at all this. You came in. You came in the market at $2.75, and then it goes all the way down to 51 cent, 52, 51 cent. Let's play around with 277, 276. So let's say you did $2,500 divided by two. Let's do 275. All right, you get 909 coins times 51 cents. You spent $2,500, and then it dropped to $463. The average person would have sold. The average person is not happy at this moment. They're sad. $2,500 just turned into $463. They leave the market and say, well, just say it. They say, this shit ain't for me. I'm out. Exactly what they do. And they quit. And then price rallies, and then it goes past that 275. And it's maybe go in the future up to $15, $20. And then they blame the market. They get upset. And they stick with their story. Man, I lost a lot of money in that market. I don't trust it. What call it market manipulation. As soon as I get in a trade, you want to turn around. No, as soon as it's not that it want to turn around, it's that somebody sold it to you because you was willing to buy it at that particular price. All smart people sold to you at that level. Smart people do not buy at the levels that you buy at. They sell at the levels that you buy at. And the levels that they buy at, you ignore and you say that's not a good price. It's almost the opposite. So keeping that in mind, yeah, you may win a couple of them buying it at this price and it keeps going. But we don't always want to chase shiny objects. I'm going to show you something here on the chart that you may have not even seen. You see this? See this move? Where we at right now? We're really in we're in a retest, guys. We're retesting this market structure in this area. Okay. This move here to here still could be in effect, meaning that downside pressure is still in effect. This is just a recovery to continue to the downside. Now, I'm not putting no fear. I'm not saying that that's going to happen. Any intelligent investor, trader, whatever, who understands technical analysis will always do multiple probabilities, multiple markups, so they can see, because then they can plan properly on how to go through the market, how to, what their plans are with scaling in and out, adjusting positions, adding to positions, whatever the case may be. You want to have these different scenarios and say, okay, if it does this, then maybe I adjust here. Okay, but if you came in right here, you might not have had a great plan. Now, this is what I would say. Let's say somebody did put $2,500 up here. all right? But they have maybe 20,000 total that they're willing to invest in the market. So this first part right here doesn't really matter to them, and they possibly could have said, I will load up here. Maybe I add another 10 grand, 5 grand, or whatever. You still got a yo-yo effect. You're up and then you're down, but then now you're up again. And this person, if they want to, they can exit out, and a dollar cost averaging, they will come out good. And this one over here, this buying here, really didn't matter because you made up for it in this area. So some people do that. To each his own. It is what it is. You can if you want to. Overall, no one can tell you really anything. If you're consistent and you make money, it is what it is. I mean, nobody can argue that. So, that's that. So yeah, you gotta own your own plan. It's your own money. You do what you want, but you can use some of these tactics to help you overall with getting better in the markets and understanding things. I'm about to wrap it up, but take a peek at XRP on Big Stamp. All right, so y'all see I got my notes. I'm going back in time. All right, so we had this nice little move up like this, and then I said, look what happened. All right, based off of this, look at this move. This move came down, right? Okay. Now, I'm not saying it's going to do this, but I said, could we have another look what happened moment? Can we come down? I've done this weeks ago, guys. And everybody was looking to buy here. This is 92 cents, whatever it was. And I was like, we may have some downward pressure. And we're sitting at what? The 61% of the first area, around 44, 45 cents. All right. If we're going to be buying, this is the first area we're going to be buying. Now you may want to know, like, why don't you just stick with just waiting for it to go down to the absolute level to buy? Because these markets can do whatever it want. Just because we use technical analysis doesn't mean that it's going to be 100% that, it's automatically going to do that. Now we use probabilities and some other stuff to play, and we can increase it, but we still have to treat it as, I don't know. I'll give you an example. If you raised, I don't know, lions in a controlled habitat, you still have to have some form of safety dealing with the lions, because they can go back to their natural instincts and they can take you out. I mean, anything can tip them off. It could be nice one day and it could turn on you. Most handlers probably know that. And so they always have a measure of safety. They may have someone who has a weapon close by. They may wear certain clothing that if they get attacked, they can do. Who knows? But they have certain safety features, you know what I'm saying, in place, just in case something goes wrong. You may trust your driving, but you still better put a seatbelt on, because somebody else out there may not be as a great driver as you. So we got safety. So me buying at this first level, there's just a little margin of safety, meaning that, hey, price can XRP and just go on forever and never come back to these levels ever again. It can do that. We don't know. But we can just buy a little bit here, and then we can what? Wait for price to properly come back to the areas that we're looking for. And 41 cent look like could be the area on a bigger, when we get bigger on it. So we can move around here. But if we violate this area, we're going down to maybe the 30 cent area. And people will be like, oh, Eric, it would never go that low, never go low. I have a lot of people tell me that. Well, they're also the same people that said it wouldn't go lower than 56 cents. That we're fully in a bull market is going to go. Well, you could be in a bull market, but you also can have bull market pullbacks too. In order for you to go higher, you got to have pullbacks. That's just part of the game. How are you going to have buying pressure if there's no what? There has to be attractive prices that attracts traders or investors, whatever, to come in the market to actually purchase. So XRP is setting up wonderfully for a loading, a massive loading, to where it's going to pump and go higher. This move needs a breather. This move needed a breather. Look at it. Look at it. This move needed a breather. So look. Boom. And suck in. Boom. And then boom. All over. All right. So keep that in mind. Don't panic. But if you rock it with me, no. And you got people out there right now that's dumping. They're dumping. If you understand the equities market, when there's too much selling and not enough buying, it pushes price down. And in the algorithm, it does that too it pushes the price down so that it can attract more people to come in the market and say, hey, listen, this is at discount. Can you buy me, please? And if the market says no, then the algorithm takes it further down and says, okay, does this look good? No. And take it down. So, oh my God, does this look good? Yes. Thank you. Then we start to see a rally. Why does the market keeps going up? Same thing. Hey, you want to sell me now? No. Hey, you want to sell me now at this price? No. Oh my God. Can you sell me at this price? And we say yes. When there's too many buyers and not enough sellers, the price goes up. Why does the price go up? It goes up because it needs someone to sell, not buy. Stocks, equities, whatever, never goes up. So for people to buy, it goes up for people to sell. Understand what I'm saying here. I'm gonna be revving it up, dropping more and more jewels like this. I told you I'm gonna look out for you. I'm gonna do something that the big dogs don't do for the so-called small man. Prices do not rise for you to buy. Prices rise for you to sell. But the people who don't understand psychology continue to buy exorbitant prices because they're thinking of a retail markup prices. Prices drop, okay, not for you to sell, but to what? Invite buy-in, okay? The market is literally designed in that method, and that's all you have is what? Up, down, up, down. The bears versus the bulls. The bears versus the bulls. It's that tug of war throughout the market. And he who understands that psychological warfare back and forth will be able to use both of them as an advantage. And our job now is to look at the bulls and the bears and not being fixated on becoming a bull or a bear, but an observer. We observe the markets and we look where we can exploit the bulls and the bears. And sometimes we can exploit them simultaneously. Okay? So I hope this video helped. I told you guys I'm gonna do more and more of these. Hit the subscribe button, hit the like button. I mean, if you're interested in crypto, you can go to the Dark Horse Horn's website. Subscribe, get the ebook, right here. You get a free copy of an ebook. All right, on the mailing list. We got a bunch of little stuff on here. We're gonna be adding more as well on here. So give it a check out. Like I said, hit that subscribe button, hit the notification bell, hit the like button. Y'all have a great night. Y'all be safe out there. All you guys are smart. All right. They call us the dumb money. So we rebelling. We would not ever be called dumb money again. All right. We're not dumb. You get it? We're not dumb. Smart money. New money. Smart money. All right. Y'all have a great one. Y'all be blessed. Stay safe. See you on the next one.